from Secret, the channel for learning about trading and investing. Welcome to Market's Next Weekly Stock Market Analysis Show, where we look at technical charts and try to understand what happened in the market during the previous week and then plan for a better trade for the upcoming week that's starting from tomorrow, September 23rd, Monday 2022. So, we'll go to the charts. Yeah, so here we have the market, which is broken out big time. And now it seems like that narrowing wedge is slowly disappearing, and probably we have a panel channel getting formed of Nifty, and that's a weekly that we're talking about. And on the daily charts you can see that big breakout moves, and there is a narrowing wedge also that is seen. And Banknifty on the other hand is maintaining the narrowing wedge on the weekly, and the panel channel has still some more space to move up towards 55,000 levels on the daily chart of the bank. So let's see the candlestick. So here is the thing, the wide range bullish candle after a wide range bullish engulfing pattern. Big reversal is what has happened in the last 2 weeks, and the candlesticks definitely absolutely bullish. And look at what has happened on the Banknifty's weekly. It has become even more bullish than the previous week. It's a bullish engulfing the previous week, and then this week he had wide range, very wide range bullish, extremely bullish, and finally broke out of that consolidation after several months, and then made a new all-time high on the Banknifty. It in fact hit the 54,000 as well, and Banknifty is heading towards 26,000. And daily charts, if you see, it's very interesting. Nifty had made big breakout on last Friday, and you have last Thursday actually, so the next expiry day. Then it was consolidating in a very tight range from the Friday to Friday. And then Friday, you look at what happens, big wide range bullish candle, definitely absolutely bullish. But on the contrary, Banknifty was showing breakout signs from the beginning of the previous week, from probably Tuesday itself. It just started moving higher, making higher highs, and then Wednesday, Thursday, Friday, big breakout moves. That's a very big move, and you can see that's 3,250 points that it has moved in the last 2 weeks alone, and Nifty has moved 1,000 points in the last 2 weeks alone. That's the kind of big breakout that has happened. Let's just summarize it. So markets broke out to all-time highs once again with 435 points and 1.72% up, and it's comfortably above the 20 exponential moving average, and it's heading towards 26,000. Can you believe that? 1,000 points has moved in just 2 weeks alone in Nifty, and it's a 70% rally from the previous major swing low in the June of 2022. And interestingly, we had seen that it was consolidating, waiting for the Banknifty to break out, and then finally on the Friday, both of them together broke out further. Banking index on the other hand also broke out. It was not happening since last 2 weeks. It was not happening. So last 2 weeks, banking index is what made them. And of course, this all thing happened in a week where the Fed had cut interest rate up to 4 years, and it had cut to 50 base points, and that has made the market heavily bullish. That would increase the banks giving more loans, and the business eventually would grow, and the money is flowing primarily from into the emerging markets from the foreign investors, and that's exactly what happened. So the only question in the previous week was that the Fed is going to cut 25 or 50, and 50 was taken very possibly over the market, and the market is breaking out, and more inflows may be there. So here we have a wide range bullish candlestick patterns. We've already seen that. And Bollinger Bands are also showing expansion on the upside. Absolutely bullishness is what it is predicted. You can also see that there is a rounding pattern. I missed out that. Banknifty is actually showing a rounding pattern breakout, and rounding or cup pattern, whatever they call it, it's kind of a consolidation. And if the breakout is confirmed, and if that sustains, you can see big moves as much as the height of the rounding pattern. So the height of the rounding pattern is around 3,000 points. So for the move on 3,000 points is what technical charts may be saying. So if that happens, but that's something, some pattern that I missed to mention here. So coming back to the Bollinger Bands, expansion upside and more upside is what the daily Bollinger Bands are indicating on both, right? And the further it gets away from the median of 20 moving average, more chance that it can bring in some corrections as well. So keep that also in mind. But otherwise, Bollinger Bands, candlesticks, and patterns and everything is extremely bullish. Extremely bullish. That's all. Coming to the momentum indicators, here is the RSI, and it's all about 60 on both time frames, weekly, medium term, or daily short term. So momentum is absolutely bullish and rising up on both. And trend indicator ADX is what tells whether the trend has changed. The trend absolutely has turned bullish, and it's rising up. It's rising up in the trend strength. So there's no doubt about bullishness with respect to movement. That trend absolutely bullish. On the right side, you see that the VIX has had actually fallen down the previous week, and this week it had shown some spike up, but you have to understand that it was heavily volatile, which big spikes on the upside and downside, and finally it settled slightly up 2%. So the VIX is still on the long volatility regime, and the market is showing the volatility because of these big breakouts and big profit booking by the domestic institution while the FIs are buying. So open interest is the next thing that we're going to look at. So it's a long build up on the futures high, and absolutely bullish. So September 25, 26 is the monthly expiry. That's what next week is, the monthly expiry. And the PCRs are extremely bullish, 1.49, 1.45. Both are extremely bullish. So options high for the monthly expiry, and the futures high on last Friday build up is also long and bullish. With PCR extremely bullish. Well, is extremely bullish. PCR 1.4 above. Normally it takes some corrections, small corrections or big, we don't know, but corrections are due. You got to be cautious about that. But the charts, the open interest data is absolutely showing just like the what the charts are saying. And let's try to understand the levels by two ways. One is from the charts. We'll do that later. First, look at how the levels are indicated by the options Y for the next monthly expiry. Coming monthly expiry on September 25th on Banknifty and 26th on Nifty. Now, 25,500 is where the highest put writing is in. 26,000 is where the highest call writing is in. As of now, still have 4 more days for the expiry to come in. Second highest put writing is in at 25,700, and 25,800 where the second highest call writing or resistance is seen. So that's a very tight range. And Bank Nifty 53,000 and 54,000, 1,000 point range is where the highest put and call writing is, where support and resistance are seen. Second highest put and call writing is in at 52,500 and 55,000. So everywhere it's all bullishness with respect to the levels. 25,500, it's very narrow range, 500 point range for the Nifty, and then it's also in a narrow 1,000 point range for the Bank Nifty. So the major resistance is going to come in at 26,000 and 54,000. Supports can be seen easily at very close by ranges. So if you look at the top section, those resistance support levels are derived from these charts. Let's look at that. So the first one, major resistance obviously will be 25,850, near the all-time highs there, and then after that it can go as high as 26,200. 26,000 is a major rounding number, so the resistance can come in there as well. 26,200 because there's 61.8 Fibonacci or extension levels to see the projected trend levels. That's what is used. Downside 25,200 is a zone with 20 exponential moving averages that can say good support. And down below we have 25k or 2578 where supports can come in handy. And if that is breached, it can go to 24,760 where the 50 exponential moving average is there. Right. That is also breached, 100 exponential moving average at 24,100. So that's how it goes. Bank Nifty, on the other hand, the first resistance will be meeting at 54,000, and after that we have the 78-bit Fibonacci extension level. That's at 55,000. So it's in no man's land, and anything can happen on charted territory. Markets could go another 1,000 just like that if the 54,000 is. And also, as I said, it's a rounding pattern. Some kind of breakouts can go as high as 3,000 points from here. Right, so we can calculate from here 3,000 will be 57,000. So it's projected levels if the breakout sustains. But yeah, there could be resistance to the 55,500 because that's the channel top, and that is also about the Fibonacci extensions, almost 100% level. So 55,500 is a level where tough resistance will come in. Downside, we will have good support at 53,350 because it's a previous breakout zone, and then 53,000 is a rounding number support, and then 50 it's also a Fibonacci extension 50%. So 53 could be a very good support. As a breach, it can go down to 20 exponential moving average at 52,000 nearby zones. Right, that is looks like unlikely. but if that is also breached, then we can go to 51,350, and 52,000 can be a good support after that, right? So that's the levels, and this is a summary of the levels from the charts that's there on the top, and the options y data is the levels are indicated down below, so we can correlate and then find the levels of support and resistance in the takeoff calls. Moving ahead, we would analyze this sector indices. So there's something interesting here. So while it had made big breakout moves in the auto sector, FMCG, realty sector, and auto sector, and slightly in the FMCG sector, market did turn out badly in the IT, metal, and the pharma last week. It was a 2% down on the pharma, it was a 2.7% down on the IT, and it was flattish close on the metal. So all these have turned to be slightly bearish on the medium term, while auto remains long, and FMCG that remains long, and reality also now it's in the long short term. So the major player is the Banknifty. That's what you understand from this. Sector wise, it is just a rotation that has happened, with a major defense sector that has owned in the market all this time has not turned negative. Right? So the big moves have happened in specific stocks, specific heavyweight stocks. That's where the money has flown in actually, and not spread across the sectors equally. And especially the bank index where money has flown is what we can understand from this sector indices. So this is the charts for the different sector indices. You have the IT index, which is about from the cup and handle, momentum rising up, and metal is showing some consolidation. Similarly, auto is also at the top of the trend channel, bullish generally. From a bullish absolutely, some pullback is coming up from in the last week, and FMCG also at the very top. So one thing we can see is almost all the industrial major sectors, the IT, the metals, the auto, the FMCG, pharma, everything is bullish. Even the reality jet phone side was in the medium term has not climbed back. So absolute bullishness is what you see overall, but you still have only three sectors that's holding the market, that's right now turned bullish, apart from the banking index, right? And three sectors, the major defensive sectors of IT, pharma, and metal. Metal is cycling, not defensive, but IT and pharma are defensive, so they have turned bearish this week. Well, so I'm repeating the same, but yeah, this is what is happening. This is what we can understand. So place your bets likewise. The heavyweight stocks, if you see a big breakout attempt is happening, there is a HDFC Bank that's the biggest contributor to the index. You know that, right? So if this is a rounding pattern, it's a consolidation box. If that breakout happens, it can move. It can move 400 points just like that. So that way you can calculate that it can hit the 2000 easily for the HDFC Bank. This breakout happens, right? But it has tried 7 or 8 times earlier and failed. But keep in mind, the volumes are still below the exponential moving average. The volumes are still below the moving average, simple moving average. So if you see a spike up there, that is why the breakout happened. As long as that does not happen, this may also fizzle out just like happened last time. So be cautious on that. But HDFC Bank has moved substantially and then trying to break out once again. After it has been struggling to do that since 2021. So it's 3 years of consolidation. So breakouts can be reasonable enough for at least 500 points upside from here. Reliance Industries is also facing some selling pressure, but a good solid recovery week today. But momentum has fallen sideways, and where the money has fallen, apart from the HDFC, is where ICICI Bank. That's why I said the money has fallen. What moved the market is the banking index. It's ICICI Bank and the HDFC Bank. Look at the candle of the ICICI banks. Big volumes, wide range, bullish candle, and then solid rally since a very long. This is the biggest contributor, and this is the biggest performer, ICICI Bank. And if you look at the IT sector, some pullback has happened, some resistance is coming in the cup in the case of Infosys, and some all-time high resistance is seen with big volumes in the TCS also. So IT sector has suddenly got hit back after a breakout attempt. Keep that in mind. And Kodak Bank, as usual, is consolidating the range, and now it's on the upward journey towards the top of the channel. ITC is showing some consolidation, although it was performing defensively in previous weeks when the market was struggling to move towards about the 25,000. So that time it was performing well. Now in this week is what you see, a logic analyst, what you see in the medium term, but moment is absolutely bullish. So ITC, ICICI Bank, HDFC Bank, holding the markets. ICC, RTC, and HDFC is what is holding the market. So that's a nutshell of the heavy which is the cultivate maximum. So even with the broad markets, you see some resistance there. Some pullback has happened in the small cap, but Friday's move has taken out that and then just formed a hammer. Hammer on the top is indicative of a potential reversal, but absolute bullish momentum trend and price battle and its all-time highs heated up is what mid cap. So what do you understand from last week? Mid cap and small cap had gone to some sell-off while the market was breaking out, but immediately recovered in Friday's move is what we can understand for me. Handle though at the very top heated up. That's about market story. Now, institutional participation here is very interesting. The 15,000 crores plus money was come in last week. Now we have another 11,200 crores of buying that has happened. FIs once again following the Fed rate cuts. That's big money that's flowing. One single day Friday, 14,000 crores of buying has happened from the FI side. And DIs obviously make money by selling by 600 crores. Right. So net longs are moved up on the longs on the derivative side from FI DIs last week. So institutional money is coming in, foreign participation is increasing, which is positive. That's what is making the market to move further, and then that force can continue. Let's have a look at the global markets, the currencies and gold and oil and all these things. Currency, the dollar is weakened after the rate cut, 0.37% down. It's at 100 and it's at the support zone. So you can consolidate at the zone is what you can. And it's not necessarily that rupee always gains when the US dollar dips, but this time it is gained. It's a 0.5% down fall in the US INR, causing the rupee to gain something, but still remain about 83.46 is not that great. But rupee gained weak and dollar losing weak. Crude oil is attempting to go further up after the dip below the 70 and now climbed above the 71, with momentum trying to climb up into the sideways after having dipped at the bear zone. So that's okay, as long as it is at that level and doesn't break out from this parallel channel. That's not crude oil. It's okay for the emerging market, oil importing countries like India. But the oil marketing companies may have trouble because of the oil dip, but that's getting balanced by move. That does not. So this is all related to the global cues of war crisis in Israel, Ukraine, and all these things. So crude prices are related to all that. So it keeps on fluctuating, but as long as it doesn't spike up too much, it should be okay for our markets overall. And here is another big thing. After the Fed cut and the Fed interest rate cuts that has happened, the gold has made new all-time high about 2,600. Big breakout. Gold is a hedging instrument. Is breaking out is good, but one way it gives us a warning that the equity market may be getting shifted to the gold, and then that can be indicative of some kind of pullback also in the equity market. So we're cautious about the fact, but as hedging instrument, gold is breaking out, and for investors who hedged or who have invested diversified portfolio that is including gold, you must be happy right now. That's about commodities. And then moving on, if you see the global markets, you have the Drawdowns. It's breaking out, making new all-time high after consolidation of a long time, and the momentum was climbing once again. Nasdaq also did well, and S&P 500 also did well. So that's the weekly charts. There is momentum and green seen after the rate cuts. Market has taken this positively. So that's some other markets. So US markets are performing. It's good for market as well. So it's a gain of more than 1%, 1.5% on almost all the major indices of Nasdaq, S&P 500, and all of them. It's is bullish in pricing. So dollar is dipping, rupee is gaining, and crude oil is okayish, and gold is breaking out. All absolutely bullish. Cues is what we get from the global markets. Two stock picks for the next week. One is BREAKOUT. It's an FMCG stock, and there's a pattern consolidation and then breakout. And the channel top is the which could give very good risk reward of 1:2, 3, 4 like that. You can trade it, and then and momentum is absolutely bullish, and trend is also bullish, but there is some divergence in momentum that can be and that can lead to some correction, but therefore have tight stop loss as shown in the picture. Now, the second one is an ICC pattern, which is it's a bank that's have more than 50% of the fire holding, and it's having a rounding pattern breakout, and then very good risk reward towards the opportunity and less possible. Have tight stop loss. It's not about the moving average, but if that also happens, then breakout could take it to 1350 easily. But momentum's climbing is the 60 above RSI. If it sustains, then breakout can happen from here towards the top of the channel. So Axis Bank and Marico, 2 long calls for the next week. Now this is definitely Samuel on the Nifty for the weekly. That means the monthly expiry that's coming. Probably is very less, but I believe that there could be some resistance coming 26,000. Range is very good. That's the beauty of this. This is a Batman strategy where we are selling inside edges and outside edges, right? And it gives a reasonable profit as long as it is within that range. And if it is big spikes happening, we still make money. And it is going outside the range, we have trouble. Basically, we sell double and then we buy half of it. And we'll have inside and outside edges also. That's what Batman completely risky, right? Profit doesn't look like attractive, but very good, decent range as per the charts we're getting here. And less completely hedged, so very less premium required. Increase the capital size as per risk appetite and the capital. Increase the portion size, I mean. So that's the follow strategy for the next week. The Batman strategy, the Nifty weekly, monthly expiry is coming on next week. So let's just wrap it up. All things are clear. It's a new all-time high once again, heading towards 26,000, and Bank News also finally broke out to hit the 54,000 following the Fed rate cuts. Banking index made the big moves all the way. Correction so far has happened is only 10 to 11%, and it is 70% near rally that has happened from 22 June on July, where the major previous swing low is there. So breakouts and bullish patterns, breakouts from cup patterns, flag patterns, and all this what we see. So let's try to bucket the different factors that's in favor of the bulls and the bears. So everything goes in favor of the bulls. Most of it, like we have a wide range bullish candles on both indices, on both time frames, daily and weekly, bullish momentum and bullish trend, both indices on both time frames, bullish auto interest futures, bullish options PCR, Bollinger Bands expanding upside, bullish bias, expansion moving average 20 is far away, FI is in buying mode, mid cap index near all time highs. Heavyweights and sectoral indexes are all bullish, and most of them are bullish. US indexes are green in the all-time highs. Mix is falling. Everything is in favor of the bullish as of now. What is in favor of the bears is that ascending wedge is getting formed daily on the Nifty and the weekly on the Banknifty. And then some retracements could come in and as the wedge narrows down. And sectoral indexes, IT, metal, pharma, it's on bearish. And what's holding big time the market is only reality and then banking index. Apart from banking index, only the reality and FMG that's further holding the market up there. So apart from banking index, we should have had more sectoral indexes that supporting it. Now that the IT has fallen back, we have some trouble there. Let's see how the market takes it next week. No. So question has been exercise as I had been telling every time, telling every week for short-term trading, especially not for investing, for trading. Because of the fact that market can be volatile, market can break out, and then that's what is happening. Market is moving nowadays 400 points kind of range. Big moves are happening, but to keep investing the same way in the SIPs and long-term investing point of view. There's no change in that, but short-term trading, so you have to be cautious. Technically, charts showed stress, not right now. It is heated up definitely, and short-term correction come in anytime. Because of only that reason I am mildly bearish, but otherwise market is extremely bullish. Market has had the Fed interest rate event is there, and already it might have rallied, but more inflows can bring in more up moves, but some correction can happen anytime. We don't know what happens. So short-term trading, you have to be cautious. Always remember that the technical charts can go for a toss whenever there is a unexpected black trend that's coming because of the different major events like pandemics, war, and all these things. So, you have to keep in mind that everything, a correction of 10 to 15 to 20% can easily wipe out your capital if you not hedge your portions properly, hedge your portfolios properly. So refer to the playlist and then check out what I told them, and then actively manage your portions and the portfolio. Otherwise, you get screwed up. So levels upside for next week is 26,200, downside is 25,000, and for Nifty is 55,000, and downside 52,000. So level select. So this 25,000 and 53,000 on Banknifty and 25,000 on Nifty. If that is maintained, then you can see another leg of rally. Never know. Right? But corrections, when do they come down? It is due. It has had only a 10% correction, so it was the biggest one. More 10% can come, and more than 10% can come at any time. But overall, market's extremely bullish with extremely heated up, heading towards 26,000. Right? It's 2 weeks, 3,200 points in Banknifty. That's the kind of big moves that has happened. Yeah, that's all I have. So play it safe. So if you like the comment, subscribe and put in your comments and feedback. Hit the like button, share it with others and all that, right, please. And I'm active on X, and I put in my charts and other analysis items regularly on the daily basis, and I also have daily daily market analysis that's coming out also in the YouTube. So check out that. So subscribe and play it safe. So that's all I have. Thanks for watching. Happy trading, happy investing, happy learning. Bye bye.